The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 27th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, if you can't dial in, you can always send me an email, steve@tfnn.com. Just inside that heading subject line, just put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 14 points, 22,299. In fact, all the indices are in the green. Leading the charge out here, you've got the semiconductor index. The stock's up 18 points, or 1 0.6%. Russell 2000 having another beautiful day. Extraordinary, 1 0.3% to the upside, up 20 points. The NDX 100 35. The S&P is up 5. Gold is back $13, headed lower. Silver's down about a penny, but it's headed lower. Light sweet crude is up 23 cents, trading out at 52.11. Leading the charge here to the upside, you've got the googly one. Google's up $12, or about 1 3/10%. You've got Beijing Limited, maybe? I don't know. Beige. I think that spells beige. And then you got any. Something like that. It's up $11 or $13. HubSpot up 9. Amazon up 8. Centess Group up about 8. Rib Education up 7. To the downside, it is Veritone Inc. up $13, 20%. Biogen, that's BIIB, down $5 or 1.5%. Delphi Automotive off 4. Chipotle down 4. Sherwin-Williams painting the town red. That too is off $4, about 1 1/10%. The question is, what do you want to look at? I think we should go look at the Russell 2000, probably the semiconductor index, don't you think? Because do you really think we're in a bear market? Really? With those two leading the charge to the upside? Of course not. You know the answer. You already know the answer to that. But where is the Russell 2000 headed to? Let's start by taking a look at the IWM. We'll do that because you and I can go ahead and use our volume scenario out there and figure out, look at that nice wide-ranging bar today. You think that the Russell 2000 believes that there's going to be some type of tax reform? It's certainly celebrating that way. In fact, let's not look at the daily chart, although the daily chart shows the confirmed A to B equals CD to the upside. 147.20 is your 1 to 1.272. You can see prices coming in there with a wide-ranging bar, especially when you take a look at where yesterday's close was. And when you come into a projected area with a wide-ranging bar, what is the message communicated to you and I? Exactamundo. It's telling you that is not going to be the resting point. So just simply on a daily chart out here, you've got 149.54 as the potential next price target, 152.13 as it. But there's no reason for you and I to just look at the daily chart. Let's go look at the weekly chart here. And if we take a look, there's already an A to B equals CD drawn in there. You and I must have already done this. So the work is done, and you can see the 1-to-1 in the weekly chart Confirmed, by the way. And when I say confirmed, we're just taking a look at the B point. That was a week that began September 19th, 2016. Your A point out here is the February 8th, 2016 level. So 93.64 to 125.88. Makes about a 0.382 retracement, slightly less, a 34% retracement. That's down here into the week of October 31st, 2016. The B point is taken out with wide price spread and accelerated volume. 315 million shares versus 132. Yeah, that is a confirmed A to B equals CD to the upside. Now, we could see that price had moved sideways, quite frankly, from about December of 2016. You'd have to say until really August of 2017. Right? And now we've taken off. And so we could try to figure out the measured move consolidation. We don't need to do that. You and I've got the A to B, the lightning bolt price projection out here. So on a intermediate term time frame basis, the Russell 2000 is headed to the 155.89 level, not the 1-to-1 at 147.12 out there. Now, that's not the only tool that you and I can use to try to gauge where it is the Russell 2000 is headed to. We can go take a look at this is a monthly chart now, right? Better to get the bigger picture because I can show you on the daily picture. Well, in the case of the Russell 2000, I can't show you a topping pattern out here. But if we take a look at this monthly chart, we can see that this 1403 level, we're not there now, we're at 1478, how that was the resistance zone of the top of its horizontal trading range. Monthly chart is what we're looking at. Solid red lines are the significant horizontal trading range levels. The dashed lines out there are the midpoints. And so this says that over the longer haul, what the Russell 2000 is doing is heading to 1630. And we're at 1478. So it has quite a lot of room to run to the upside. That is the bigger picture. Now, not to confuse matters, but if we do take a look at the Russell 2000 equity futures contract out here, we might as well get them all in there. You can see that yesterday, you and I talked about this, was a TD sequential count. That is a blue number 13 on my screen out here. And if there is one thing that the Tom DeMark system does for you and I, because that is where things should be somewhat stretched, that is where you should see a turn if you're going to see one out here. And again, when Tom DeMark developed it for, I know he developed it for himself, but really it was for, come on, my neighbor down the street. In any event out here, the one thing that you and I can learn from this is that when these turn points fail, it just tells you how much Tudor Jones, how much momentum there is inside whatever it is, the chart that you're taking a look at out here. Is today a blow-off top? Nah. Not a chance. Not a chance in romance out here. Of course, we could have a different take on that tomorrow if we see some different signs. But right now, the way you and I take a look at the lightning, we just looked at several different patterns out here. And they all say one thing. One ping, Vasily. The IWM, Russell 2000, ain't done, headed higher. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So the first question up is from Susanna in Canada. Susanna's got a question regarding the Nugget, NUGT, and the question is, would this be a good entry point to go long for a few days? And if not, just simply, what is my take? So, Susanna, thanks for writing in. The first chart that you and I are going to look at is the chart of, on the top portion, the top app, is the GDX. Now, we can go take a look at the Nugget. My preference is for you to make your trading decision based on what you see in the GDX versus the NUGT. I'll show you why in a moment. But since they both would be in essence the same out here, not completely the same, but the same, I want the directional piece is what it is I'm really trying to share with you. So in order to go along the GDX, it's best to make sure that we've got the direction of gold headed in the correct direction as well. And so we need to cover that in order to really give you my take on what do I think about the GDX or what do I think about NUGT. So we'll take a look at all those aspects. The most important thing to take from this set of charts is the directional correlation that exists. Now, specifically with regard to your question about the NUGT, I'll put this up on the screen as soon as I can figure out where. There we go. Here we go. So here's the Nugget. Here's the three different time frames that you and I can take a look at. You've got daily, weekly, and monthly. The reason why I don't really care to look at the NUGT is because of all of the reverse splits that this thing does, because of this being, in essence, a triple ETF out here. You see, Susanna, this would say, which you and I know that this is not the case, that at one point in time, such as in September 2011, that this equity actually sold for $17,458. We know that's not the case. It's just all these reverse splits out here. So I just would prefer to utilize something that's going to give us some better information. Here is the GDX as an example. The GDX, we know, actually did sell at a price point of $68 back in September of 2011 out here. So just better information for us to take a look at the GDX. That, of course, is my opinion. but you asked me for what my opinion was. Now, as we speak right now today, you've got a swing point. That's the swing point from September 21st. That's priced at the low of 23.04, 39 million shares. So far today, as of 1:20, or 20 million shares out here. So it's similar volume. Looks like maybe just slightly less. The low that you're keying on is 23.04. We're trading at 23.05 right now. Now, one person or someone could say, hey, if it closes above 23.04 on lighter volume, isn't that a rejection of a swing point? And the answer there would be absolutely yes. You got that right. But I wouldn't want to see you take a trade headed south when you don't have a trade headed to the north side, when we might be looking at gold heading to the south side, right? You know what? You want to have everything going in one direction. Likewise, if this closes below 23.04 today, Susanna, even if it's on light volume, there's not anything here to show us that we have hit support. You're below a daily profile. We haven't seen the GDX below a daily profile out here since the last time was on its decline. But ever since this thing made a bottom back on July 10, 2017, we have not seen a close below the daily profile. Clue. And we have that right now. What that really says is if you wanted to take a short-term trade, you must see a close above 23.20 today on light volume. Otherwise, this is headed to lower price. Now, we do have a brand new weekly box. This formed last week, as a matter of fact, out here, and we're trading with inside it. It's kind of an inside profile, which doesn't provide you and I with a ton of information, other than the fact that 2233 is very likely a target, at least an initial target. That's what the weekly chart is showing you and I. And on a monthly basis out here, the support level would be 1628. Not calling for that as we speak just yet. But monthly, let's say, not providing you and I with really a ton of information. So if we take a look at Stevie's other chart out here, we haven't looked at gold just yet. If I take a look at the GDX, for you. This is suggesting to me, again, that it really wants lower prices. You can see the price oscillator right now. Its reading is 0.16. It's headed down to 0. As this gets to 0, what we will then see is a stalling in price. And that stalling in price could be some type of counter trend rally that you could then go ahead and play. Not necessarily advisable, but it sounded like you're into this, couple-day trade out here. That would be a potential time to do that, because what ought to occur is we ought to see price and Stevie's red line catch up with each other. 2396 is the number right now. You're 2304. I'm not suggesting, because it can meet, because the line keeps coming down and price is moving sideways. So I'm just giving you what the reading is right now. The answer, the final Jeopardy answer to your question is, don't take a trade in the mining sector now. Now, we haven't even really gotten to the reason why, other than those that I've provided to you. But if we take a look at Goldilocks as we speak right now, yesterday was close. It was no cigar, but it was close. You could see the nice butterfly cell pattern that formed inside of the gold contract. This tells us 1280 is a minimum objective. We're at 1288. That might not sound like a lot. I believe that gold is going to get below 1280. In fact, quite a bit below 1280. You might even say, how far below 1280. So let's go take a look at those A to B equals CD patterns to the downside, because this is what it looks like to me. It looks like where gold is headed to, and this is going to take place over the coming days, weeks. This could take a while, but we're looking at 1245. We're looking at 1226. We might have been looking at 1201. But at least 1245 is your 1-to-1 A to B equals CD to the downside. And I doubt very much. Now, look, some miners may hold up, but in the GDX, you're looking at playing that entire basket. So don't do it. Just don't do it. No reason to. And you want to pay attention. We'll see what happens when gold's price oscillator gets down to its zero level. We're a ways away from that. We're not that far away from it in silver. So we ought to see silver. It's not surprising to me that we're seeing silver not do too much as we speak right now. It was relatively unchanged on the day out here. That doesn't mean that silver is sending a message to you and I that it is in fact getting ready to move higher. If anything, silver came right back to see Stevie's dash red line. That's a level of support out here. take a look at that price oscillator getting very close to the zero level. This is where the stalling pattern ought to occur. This means that we ought to see over time my red line, currently priced at 1734, and price catch up to each other. Don't let that fool you or make you believe that silver has found a bottom. It hasn't. It's not going to for a while. Gold is headed lower. Silver is headed lower. Some of those miners are headed lower out here. And the only way that that changes is if, in fact, the yen decides to strengthen out here. And if we go take a look at yen futures, we'll do that here momentarily. Yen futures gave you the hugest signal. Let me see out here. Or a signal is really what I should say. Yesterday, we've got a falling price oscillator below zero out here. Yen futures want lower price. And if there's one thing that you and I know, yen futures are driving the direction of gold. They're driving the direction of bonds. Not until we see a bottom here, but we see a bottom in those other two vehicles. That one's for you, Susanna. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Lines are open, folks. You can call on in. Of course, the email line is open as well. I don't see any other questions that we have out there. So one might ask, on a shorter-term basis, Steve-O, what is it that you're looking at? That's an excellent question. So let's go take a look at that. Let's go take a look at the NQ and the 30-minute chart out here. And the reason, or what it is that I'm looking at, you will see the reason as you're watching us here on Tiger TV. You can see all those letter G's that we have. You can see the most recent bottom formed with the letter G. That was on about 3 o'clock in the afternoon back on September 25th. You can see the most recent top was at about 8:30 in the evening. That was on September 24th. And we can see that at this morning's open, this was at 10 o'clock, between 9:30 and 10, the 3-minute chart where we're looking at, you got to your 7th wave move. You got to your letter G. So that is what I'm watching for right now. Will that get taken out? If that gets taken out, we like to kind of refer to it as a recycle. What I'd really refer to it as that a change in trend is underway. The change in trend with regard to the fact that these 7th wave moves aren't stopping price direction, and that would suggest that price is going to continue higher. Now, I do believe that price is going to get up to 59.33.18. Is it going to take out the actual high, though? I don't know. Now, you might say to yourself, well, why would you say that, Steve-O? Why would you say 59.33.18? And the reason would be, one, we have a price oscillator above zero. That is the bottom panel. We have price above Stevie's red line. There's only one meaning of that, and that's called bullish. Then we fall back to our TAS market profiles, the 30-minute market profiles, the bottom of the box being 59.11, the center of the box being 59.18, the top being 59.33. Centers closer to the bottom. This says that buyers are in control of this pricing area, the entire pricing area, 59.11 to 59.33. Look, I don't have certainty. It is just a high probability that what price is going to do is test the 59.33 level. There is only one read when you take a look at this 30-minute chart for the NQ. That doesn't mean that it recycles and takes out that high, because you do have resistance at the 59.33 level, and the actual area that needs to be taken out from 10 o'clock this morning, that high was at 59.3675. That's the high that has to get taken out. If it does, then the Qs will decide to participate. Now, we go from there inside the Qs and try to get a little bit bigger picture. Where's that bigger picture in the Qs? Could it be there? It could be there. Could it be here? Could be here. It could be anywhere. Inside the Qs, then, this is why it's really important. Now, let me do this. Let me kind of explode the chart up on my screen. Let me get rid of these trend lines out here. That's just kind of creating a little bit of noise. We don't need any more noise. And what you'll notice here, or you should notice, is that the bottom of the daily box thus far has been resistance. That level is 59.32. We were looking at 59.33 on the 30-minute chart. So that's the significant resistance area. If price inside the NQ were to close above 59.32.10, now you've got game back on with regard to price exploring 59.77, maybe even 60.12 out there. So the 30-minute chart G, the 30-minute chart top of the box, the daily bottom of the box are really key areas for the NQ. This is where you get your next, we'll call it your intermediate term time frame message as to what the markets are going to do. We've got a divergence out here with regard to the Russell 2000, which you and I looked at. I mentioned the semiconductor, so we should probably go take a look at that as well. But you would ask the question, hey, Steve-O, what are you looking at in the short term? And this is what I'm looking at in order to generate the message for you and I as to what the markets want to do. It's September 27th. We've got the end of the month coming into play out here. Pretty darn good chance that we're going to see these resistance levels fail. Can't guarantee it. You just have to wait. We're so close to it, you don't have to take any kind of action whatsoever. If you're short and you see it close above those levels, though, your sphincter muscle is going to get a little bit tighter out there, and perhaps no reason to actually be short. Now, let's go take a look at what's going on inside the semiconductor index, because that's in essence what I'm looking at right now inside of the NQ for the next massage out here. And inside of the semiconductors, they did bounce up into resistance earlier. I think Dano pointed something out, which was Stevie's red line. But let's go see where it's trading in regard to Stevie's red line. And it's trading slightly above that area. So let's go take a look at that area. And, yeah, I'll be happy to do the ES for you, Maria. My pleasure. And the red line number, let me see if I can get it for you. Where's my box. Where's my box data? Data series, no, chart data, where show data box, there we go. So let me get my cursor out here. Today, if the semiconductors close above 1143.27, the message is bullish. There's only one reading. Only one possible reading that you or I could generate. And that would be because we then would have a rising price oscillator above zero. That says that price goes back and it tests the resistance area. And that's the bearish engulfing. That's the highs out here. May even take them out, but that's your next resistance area in the 1170 time frame. But the real key number to be watching today is 1143.30 to be exact. We're just $2 above that. I don't know how it's going to end, but you'll know. If you see a close above that 1143, right now it's 1143.32, so the number is going to change a bit. Just use 1143, and if it's real close, then you got to wait till tomorrow. Or if you're a newsletter subscriber, you'll know because it'll be inside the newsletter as it is each and every day out here. But the semiconductors, the IWM, they're looking mighty darn tasty right now, and that tastiness is not coming from bear meat out here or porridge. Maria wanted to go take a look at the S&P 500 or the ES Mini. So let's go take a look at the ES Mini for her. And we'll do that. Let's go flip over to this other chart because, Maria, I don't know what time frame it is you're looking at things on. So let's do this. Very first thing with regard to the ES Mini, which I think you already know this number, which is going to be 2497.25. As long as the ES Mini trades above 2497.25, there's really only one message. This is not with regard to trying to call some type of top. If you trade above that, it is a bullish signal. In fact, if the Dow futures, equity futures, are going to trade above 22,263, and we don't have to worry about the Russell 2000. It's already way, it's got a mind of its own, and quite frankly, the NQ is in bullish territory as well. So it's just the it's just the Dow equity futures contract. 22,263 would be the number. But on the ES, as long as about 2497, that has a bullish connotation to it. Can I say connotation? I think I just did. Now let's go try to figure out where did I put it? Where is it? There we go. The ES. Now here I can provide you with the multiple time frame pieces of information if it is the profiles that you're after. I don't know. But here, stepping backwards, meaning going from weekly to daily to 240 to 60 to 30 out here. Weekly, there's only one call. Bullish. You're above market profiles. As long as price stays about 24.78, it's bullish. Daily, you're in between the box that says sellers are in control, so 25.07 is a key level there. If you clear that, boy, things get really bullish out here. It's just trading at the 2,500 area, the point of control. That kind of makes a lot of sense out here. Support was tested on the 240 earlier today. 24.93 is the level there. The reality is, there's not anything bearish about the ES Mini. Not as I see it at the moment. See between TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi folks, this is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the Tigers and Tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 18. So Maria's real question was, and let's try to address this. I'm trying to understand how we, her and I, can stay at the same place for 12 days. She was referring to the S&P 500. How we can stay at the markets, how we can stay in the same place for 12 days while the Russell is cruising and bonds and gold are down big. So let's just take a look at the Russell 2000 because each instrument is going to be a bit different out here. If we take a look at the Russell 2000, remember, it was moving lower while the S&P 500 was actually moving higher or sideways. And if we take a look, this I'm referring coming back here into the end of August, which really formed a great bottoming pattern out here after it did that seventh wave move to the upside. But if we take a look at the great bottoming pattern, it was your nice lightning bolt. Right, your A to B equals CD to the downside. It was a price relative strength divergence, but it was a 1 to 1.618. It was a price moving lower, less relative energy out there. It was formed with the hammer candle, and I am remorseful, really remorseful, for not taking that trade, especially not taking the trade once price got above Stevie's red line out there, let alone we got the signal the day after the hammer candle. You now have a confirmed A to B equals CD to the upside. So you just simply have to take a look at that trade, and it's going higher. Today's wide-ranging bar says this thing is not stopping anytime soon out here. The mere fact that it's up above, well, I guess the Russell today is going to have a TD sequential count. So the Russell equity futures contract on a daily basis did yesterday. Today it's going to be the TD sequential count. So it can be a topping-ish type pattern. I guess we'll just have to watch that out here. But really, not until price would break below Stevie's red line, 1447.20, is there going to get any skirts in a tizzy out here. So these things don't always move in the same direction out here. Is the Russell 2000 busting out because it was oversold to the downside? That's part of it. And it created a beautiful buying pattern. Is it busting out because when you take a look at any tax reform in the United States, any inkling of any tax reform in the United States, that the companies, the largest group of companies that are going to benefit are the ones that are inside the Russell 2000. I mean, those are the companies that should benefit the most. So in this market that has been rotating, it sort of is just a perfect, and it's not a storm, it's a perfect ending, so to speak, with regard to what you see take place inside the Russell 2000. So you've got confirmed A to B equals CD patterns out here. To me, it just really makes sense. If we take a look at, hey, who cares what Steve-O thinks? What do the market profiles think out there? Hey, well, that's valid. And if we take a look at the Russell 2000 out here, you're going to see that last week was a break above the weekly resistance level, the top of the box. That box out here, let me go ahead and explode it up just a tad. The top of that box, Maria, out here, you can see how this weekly structure was bearish. Bearish because the center of the box closer to the top. And as soon as price closed above it, which it did last week, whenever you can break significant resistance, it's sayonara, baby. Adios, amigos. I'm headed north in this case because it broke through a significant line of resistance. So that was the message on the intermediate or longer-term basis out here. Heck, the daily chart, price got over those profile levels back in August 31st. Haven't looked back. No new profile that is formed out here. So that is this is just green shoots all over the place. So with regard to buyers and sellers, you're not seeing sellers line up anywhere. Not even on a 30-minute chart out here inside of the Russell 2000. Now, granted, I have a 10-minute delay out here in this chart, so unless something's taken place in the last 10 minutes, there's just not anything out here that shows any kind of resistance. It's like being stuck in a traffic jam, you know? And I don't know about you, but that foot can turn to lead out here. I want to get the heck out of that traffic jam and try to catch up and make so that's what's going on really there. Has nothing to do with bonds, has nothing to do with gold out here. Now, those of you that believe if bonds are going to move lower, that money's going back into the market, then so be it. Bonds are headed lower. And so then how can you take a bearish stance or position inside of the market? But that's not what I believe, because I know that correlation sometimes works and sometimes doesn't work. The correlation that does work, though, is, hey, Steve-O, what's going on with the yen? Right? We take a look at this all the time, but it's important to always take a look at it just to make sure that nothing has changed, right? And here's this chart. The top portion is gold. The next portion is the 30-year Treasury. Below that is the yen. And then, of course, even below that is U.S. dollar index, which let's just ixnay that, because basically it doesn't mean diddly with regard to any of these instruments that we're taking a look at, and nothing with regard to the markets as we speak right now. So let's get rid of that U.S. dollar index. This is the chart that makes the most amount of sense to us is, hey, what's going on? And this is the 10-minute chart with regard to the yen. Now we can see we've seen a bit of a bounce inside of the yen out here. We've seen a bit of and again, it's a directional thing. I wish it were as simple as pip for tick. But it's not, but it certainly is a directional thing. So the question becomes, what is the directional message inside of the yen? And when we and this is what's going to affect bonds, and this is what's going to affect gold out here. And so if we take a look at what is the message of the yen, or what's the message is, the clearest message is bonds. That's the clear one. That's the clear one as we speak right now. Because, and you and I, we make a big deal about that zero line of that price oscillator, the very bottom portion of my screen out here, about getting down there, and then the market communicating to you and I, what does it really want to do? And what we can see here yesterday and the day before was nothing more than a test of Stevie's red line. Right? This was a bearish test of that red line because you were at zero, because it never could close above Stevie's red line. And today just fell through the floor out here and headed down to the swing point lows, probably even below the July swing point lows. We'll see when price gets down there. What we know is we have a falling price oscillator below zero. It's a freight train headed south out here. It's an A to B equals CD to the downside. It's a wide-ranging bar, right? You guys that are going to be lucky enough to go see Tom in Boston, I think that's even this coming weekend, right? Those of you that are fortunate enough to go see Tom this weekend, he's going to be teaching you about the art of timing the trade. And I guarantee you, at some point in time, he's going to say to you, when you take out a B point of an A to B equals CD with a wide-ranging bar, accelerated volume out here, wide price spread, accelerated, he'll use those terms, wide price spread, accelerated volume. And that is what we have going on right now in the 30-year Treasury, on top of just simply getting below, rejecting Stevie's red line out here. So 1-to-1 takes you to 150.34. It's only done a 0.382, less than a 0.382 retracement out here. So what does this mean? It means all counter-trend rallies should be sold. And the only way that this changes is price has to close above Stevie's red line. Can that happen? Shoot, anything can happen. out here. But we've just got to go with what it is that we know out here. So my personal opinion is just stay focused on each individual chart with regard to the 30-year, with regard to gold. Pay attention to what's going on inside of the yen, nothing else. Try to get those correlations working. Pay attention to the price oscillator. Pay attention to Stevie's red line, and all will be well. That's my take. Steve Rhodes with TFNN. We'll be right back to close out the show.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So, this is a quick update. We talked about many things, but certainly the NQ on a short-term basis had to get it up to 59.33 area. We're only about 5 points away from that. We're going to be watching whether it can take out the 10 o'clock high. If it does, says the markets are headed higher. If we go look at what the market breadth of the NASDAQ 100 is communicating to you and I, short term, we'll look at 60, 240, daily, weekly out here. We had a nice little bullish crossover. This was at 6 o'clock this morning. That's the green line crossing above the red line. Right now, as we speak, we have 55 issues that are trading above the top of the box, 24 that are trading below, 27 that are trading in between. If you add all those up, you're going to get more than 100 because it's no longer the NASDAQ 100 out here. The point is that on a short-term basis, it's bullish. That says that 59.33 level that I gave you, another piece of evidence to say that is going to be targeted and potentially taken out. If we look at the 240-minute time frame, the 4-hour time frame out here, we had a nice little bullish crossover. That took place at 4 a.m. this morning. As we speak right now, 53 issues above the top of the box, 24 below. Very bullish on that time frame. How about the daily time frame out here? Kind of getting the picture. We take a look at the daily time frame right now today. This is it. This is where you get the bullish crossover out here. 39 issues are trading above the top of the box. 24 issues are trading below the bottom of the box. Be careful out there. If you're short, the NASDAQ 100. If you're short, maybe depending on when you got in, you might have a profit in that trade out there. Watch that. Watch the high of the day. If it gets taken out inside the NQ, you just got a signal of a change in trend on a daily basis. And all that lines up with regard to going into the window dressing, the fund buying. You just kind of name it out here on the weekly basis. And the NASDAQ, has been the index that struggled. Although you and I looked at it yesterday, and said not so much. That's what the equal weighted was telling you. Weekly, it's bullish. Oh, folks, that's all I know. That's all I know at this time. Oh, I know one more thing. Your favorite polar bear of mine. David White's up next. After that, it's Tom O'Brien. I'll see you on Terrific Thursday. Have a great Wednesday, folks. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.